In this video, we're introducing the GEM dashboard, short for Gamma Expected Move. It's designed to bridge the gap between the fast, intraday focus of the zero DTE dashboard and the broader regime context of the market state dashboard. While market state defines the environment and zero DTE captures execution, GEM provides forward structure, showing where Gamma positioning is likely to influence price movement in the sessions ahead. For zero DTE traders, it's the map of expected range, directional bias, and key strike alignment. The GEM dashboard maps out the expected price range of SPX based on real-time option flow conditions, showing where the market is statistically likely to move over the next few days. For zero DTE traders, this forward structure is critical. It defines the boundaries of expected movement, helping you identify when price is approaching exhaustion or breaking beyond equilibrium. The GEM dashboard uses raw Gamma values and models expected price behavior, giving traders a reliable framework to gauge where intraday setups align with broader positioning. SPX price is plotted alongside 5 Gamma predicted return bands covering 0 through 4 DTE. Each band represents the statistically likely high and low range for that day's forecast window, based on current Gamma exposure and volatility behavior. For zero DTE traders, these ranges are expected to contain price, but this can be impacted by the market state regime. At the bottom of the chart, raw GEX is plotted separately, providing context for how strong or fragile dealer positioning really is. Traditional forecasting models assume a normal distribution of price movement, but real markets rarely behave that way, especially in a zero DTE environment, where volatility constantly shifts. The GEM dashboard accounts for this by integrating a volatility-adjusted component that adapts to current market conditions, capturing skew and asymmetry in real price behavior. When volatility rises, the distribution skews negative, signaling greater downside risk and wider potential ranges. Conditions 0 DTE traders often see as volatile reactive sessions. When volatility falls, the skew turns positive, supporting upward drift and more controlled price movement. The result is a realistic adaptive forecast that adjusts to the current volatility regime, giving traders a clearer view of how far SPX is likely to move and in which direction during the 0 to 4 DTE sessions. While the GEM dashboard provides statistically grounded return bands, these levels aren't absolute. They're often tested or exceeded during active sessions. Whether those levels hold or break largely depends on the current market regime, as defined by the market state dashboard, tying short-term price action back to the broader structural context. In regime 0, where Gamma exposure is positive and volatility is declining, market maker hedging suppresses price swings, creating a stable and controlled environment. For zero DTE traders, this means narrower ranges and a tendency for slow upward drift as dealer hedging supports the market. In these conditions, the upside GEM band is often at greater risk of being challenged, making premium selling or range-bound strategies more favorable, provided volatility remains contained. In transition regimes like Regime 1 or Regime 2, GEX and volatility are moving in opposite directions, creating choppy, uneven price action. But the key is understanding where the market is coming from and where it's headed. If the market is transitioning toward a less stable regime, ranges will expand, and GEM levels are more likely to be challenged or broken. If the transition is toward a more stable regime, volatility typically contracts, and GEM levels are more likely to contain price. For zero DTE traders, this insight helps determine whether to fade extremes within the expected range and provides structured levels for option selling strategies. The transition into Regime 3 typically occurs when the market moves from Regime 1, where GEX is still positive but volatility is rising, into a state of negative GEX and expanding volatility. This shift marks the point where stability gives way to disorder. From a zero DTE perspective, this is when price action starts to get wild, ranges expand rapidly. GEM levels, which previously contained price, are now frequently breached as the expected range can no longer absorb the volatility shock. This phase demands caution and is a period where GEM levels will typically be breached. Option selling strategies often fail in this environment. The GEM dashboard translates regime context into statistically grounded price ranges, giving zero DTE traders a clear map of key levels to structure trades around. When the market is stable, GEM levels act as containment zone. But as volatility builds, those same levels are less likely to hold, signaling that expected ranges may break and volatility can expand beyond forecast. Together, market state and GEM help zero DTE traders align strategy with structure. To capitalize on that structure in real time, the zero DTE Phoenix Dashboard brings together intraday option flow, to show how positioning and volatility drive the market. Now that we understand the market state, its regimes, and how gem levels define expected movement, it's time to shift our focus to the Zero DTE Phoenix Dashboard, where we bring it all together in real time.